Upon seeing all the excitement and all the gains happening in the uranium space right now, I thought I'd do this little supplemental video discussing different levels of risk and different assets within the uranium space, different ways to play it, because I've been talking about a lot of small little penny stock equities, and they are absolutely not for everyone. So I just thought I'd do this video discussing different strategies to play the uranium bull market. Please give this a quick read and remember to always question if anyone, especially some random person on YouTube, knows what they're talking about. So the main two ways to play the upside in uranium are to buy things that basically are physical uranium or to buy uranium equities. Now, which is better? Again, this depends 100% on you because equities are more volatile and more uh, subject to drastic swings. They are leveraged to the physical. So if the physical moves 5%, the equities may move 5% or 20%. So which is better? It depends on your risk tolerance. Now, I think it's important to note that high risk doesn't necessarily mean high reward. High risk is more along the lines of a potential for higher reward because it's possible that the uranium price goes to $100 and some of these high risk names actually not only don't end up turning into a project, but it's possible some of the exploration ones don't actually find anything. And so uranium could be $150 and these stocks could be absolutely worthless. That's just important to consider when looking at stocks. Now, what do I suggest? I suggest really figuring out before you proceed what your personal risk tolerance is. So starting off with relatively low risk, you have Uranium Participation Corporation and Yellowcake PLC, along with Uranium Trading Corporation, which should uh, IPO soon. Um, these are basically trading physical uranium. Um, they are the lowest risk, but they still do have significant risk relative to other assets. Before I get into the equities, I feel it's important to note that leverage works in both directions, meaning the equities that are levered to the price of uranium will go up and down quicker than the price of uranium and more viciously. So be careful. Similarly, um, if uranium should get phased out or no longer useful, well, the commodity and the stocks, one should reasonably expect them to go to zero. Now, I don't think this is going to happen, but I don't know everything. Nobody does, especially not me. Next, you have the lowest risk equities. These are such as Cameco and NextGen, Cameco being the biggest uranium producer in the world, who's currently shutting down production and securing production from other people. That should just tell you how ridiculous the sector has gotten. And then NextGen is the biggest, best undeveloped or currently developing project in the world, and it's in a safe jurisdiction in Canada. It's gonna be a mine someday, I think, and it's fairly safe. I would call this next group second tier equities because they're still, I think, fairly safe, but they do have more risk than the first tier, I think. This group includes such development projects as Denison and Fission Uranium and Uranium Energy Corporation, as well as current producer Ur-Energy. I believe these things are all fairly safe, but I would not recommend them to people with a low risk tolerance because they're not done deals. Next, in the third tier, I would include such names as Paladin, which has a number of assets, including a fully built up mine on care and maintenance that could come back online should the price go high enough. I would also include energy fuels, which would be in the category above it, except it has recently gone on a bit of a run due to vanadium. And if the price of vanadium should correct in a major way, I believe that is an added risk to energy fuels. However, the price of vanadium could keep going up, which would be a benefit to energy fuels. But all in all, I think it's an added risk, but could be also an added reward. In the fourth tier, we have some companies with some uh, projects that seem to be uh, more developed, but also have some additional risk, such as geopolitical risk or um, more likely to need financing or some debt or are just less developed than the other projects. And these include GoviX, which is located in Africa, Plateau, which is a relatively new company, and Laramide, which has some debt and some deals and some basically will probably need some more cash soon. The next category, it could be called pure speculation, or I guess fifth tier also, includes Vision 3.0, which is basically a land package in the Athabasca Basin. Same thing with Sky Harbor Resources, just a bunch of land prospect generator in the Saudi Arabia of uranium. And Blue Sky Uranium as well, which is a very new discovery, which is a long ways away from being a mine. All of these could go up ridiculously or become worthless someday soon. They don't necessarily correlate as much to um, the price of uranium as their projects are newer, just discovered, if any. Lastly, we have a few companies that have kind of gone dark in the years since uranium was popular, and these I would call forgotten question marks, such as Encore Energy and Texas Minerals, which are companies that haven't really provided any update in a few years. They could have disappeared in the interim, but they technically still exist and may someday come back and be worth a ton if their projects turn out, and if they don't, and if they just fade into nothingness, it would not surprise me either. But this is the type of company that you can, type of company and type of project that if uranium gets hot again, will just start popping up everywhere. Just wanted to say thanks for watching, everyone, especially those of you who made it this far in the video. And a big, big thank you to those of you who have subscribed to this channel. I'm still waiting for a first comment. Um, and yep, catch you next time. And in the meantime, have a great day.